Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and I've left my lines on the chart from last week so you can see once again how accurate candle charting can be. This diagonal line right here is what I projected last Friday, where I said the market would pull back to test support right here, right around the 162.5 level, and then we expected a bounce. That's exactly what happened. We saw the bounce right across the major indices, and I will erase these lines now that you have the evidence and how the charts can be used as a forecasting tool. But I also want to show you how the charts can be used as a risk management tool. This area right here is a gap that was left from last week. Open gaps generally fill about 80% of the time, and then what happens is after the gap fills, we generally get a reversal. Again, 80% of the time, once the gap fills, the market will reverse. So I'm expecting this gap to fill, test the former trend line, which is this diagonal line, and then I expect a drop towards the end of the week. That's for the diamonds. Looking at the spiders, that's ticker symbol SPY, S&P 500 ETF. You can see the same thing was projected where I thought we would get a bounce. We did. Now there's a roll reversal line right here around 205, so I'm going to continue showing this line in an upward direction to retest that roll reversal resistance, and then I believe that the spiders will pull back from there. The Russell 2000, more broad-based index, you could take a look at the daily chart, and you'll see this was the support level that I thought we'd drift down to. That did happen, and there's a minor gap right here at the 1200 level, so I'm going to leave this line in place. I think we're going to continue up next week early on, test that line, bump its head against the new downward trend line, and then I think we can possibly see that. Now, if you look at the Qs, that's the Nasdaq market, QQQ, power shares. Same thing right across the board. We had the support level tested. We then had the bounce, again an accurate projection. I'm going to leave this in place and wait for this gap to fill, and then I believe we will see a pullback after that gap fills. So I'll erase all of the other lines that we had in the previous market reports, and then we'll leave these in place. Finally, the VIX. This is one of the most accurate forecasting tools that you can get your hands on, and I would encourage everyone to keep it on your watch list. My mid-week report on the VIX was that we would come back to fill this gap, which would be bullish for the market short term. Remember, the VIX is contrarian, so a pullback in the VIX would mean a short-term rally across the board, particularly the S&P, and then once that gap fills, I think we'll pivot and go back up, which longer term would be bearish for the general markets. If you're interested in learning more about how to trade gaps, go to themarketguys.com, click on the video tab right there, and you'll see our video library. These are called market shots. Scroll down about 3 rows down, and you'll see Trading the Gap right there. It's a 3-minute video. You can look at that as your financial vitamin for the day, and of course you can explore other videos that we have available to you for free. So again, this is AJ Monty with the Market Guys. Have a great week. So long.